Top of the morning to you traders. Welcome to the Flow Show, Monday 21st July. A new week begins and some big problems happening in Japan, which I'm sure you're all aware about, which we will talk about in great detail, no doubt. Morning, Kay. Good weekend?
Morning, Ryan. Morning, everybody. Yeah, nothing really very special this weekend. We spent quite a bit of the day monitoring those Japanese events, but which actually were not as massive as we may have expected.
Nope, but still bad enough on the political front. As I said, we will get stuck into that in a bit. Right, let's get cracking on what else is going on. China, they kept their LPR rates unchanged 1 year, kept at 3%, 5 year kept at 3.5%, so still not ready to get cutting once again. We got some data out of New Zealand. Some inflation data, some Q2 numbers there. Quarter on quarter, inflation coming in 0.5%, not as much as expected. Was expected 0.6%, and that's down from the 0.9% previously. However, the year-on-year number came in at 2.7%. Again, not as much as expected, but that was a gain over last month. They've got another measure called the sectorial factor inflation model doodad. That came in higher, also at 2.8% year on year. So a little bit of inflationary pressure there for New Zealand. Over at the ECB, or in Europe, we had a survey, an inflation survey, this one done on firms. And 1 year inflation expectations dropped to 2.5% from 2.9%. 3 and 5 year inflation was unchanged at 3%. Some of the details in that report noted that most firms affected by trade tensions are manufacturers and firms with exports to the US. No shit, Sherlock. And exposed a net 23% of firms are optimistic about developments in the next quarter. But they report a deterioration in their profits. They will want that to be improved over the months ahead. We've also had from Europe this new German coalition, let's call it, of businesses. It's called the Made for Germany coalition, crew, whatever your club, whatever you want to call it. They're still talking about triple-digit billion investments in Germany. There's apparently 600 and something billion available. So they're triple digits spending, and they're looking at, the last we heard, it was circa 300 billion that they were looking to invest, all these big firms in this new club. So not fully up to the total amount, but still a good chunk, and that's moving forward. ECB Centeno, the Portuguese central banker, one of the biggest, if not the biggest, doves at the ECB. His term finished on Saturday, just gone. It's not certain whether Portuguese authorities are going to keep him on, replace him. There is a possibility that he could get moved up the ladder within the ECB to the executive board. So that's a little bit up in the air. If he doesn't get that job, and if he's replaced, and as I say, that's going to be one of the big doves taken out of the ECB, and we'll have to see who he gets replaced by and whether they're just as dovish as he is. So that's just something to keep an eye on. Right, going back to data on Friday, and this was quite funny because Trump woke up and started his morning slagging off the Fed over them choking the housing market, only to then see the data out from the US, housing starts and permits, both beating expectations and coming in higher than last month by quite some margin, just looking at housing starts there. So a little bit shot himself in the foot with that one. Then we got the Michigan data out, which again showed an improvement in the consumer. Headline sentiment coming in at 61.8, expectations 58.6, current conditions 66.8, so all an improvement there. We also saw inflation expectations coming down a good chunk again. 1-year inflation expectations were expected unchanged, dropped to 4.4%. 5-year was expected to drop a pip, ended up dropping 4 pips to 3.6%. So we've seen that coming down to more manageable levels, shall we say, from some lofty levels we'd seen previously. It's still a bit up in the air as to whether the prior ramp up in these inflation expectations is going to be translated into data. We did see CPI last week coming in hotter. If we see another couple of months of that, then we may be seeing that effect. There's obviously tariffs involved in that, but the consumer expectations are a big part of spending patterns, and can affect inflation that way as well. So we're yet to see how that's all going to play out. But again, more data showing that perhaps we're over the worst of the consumer blip as far as sentiment is concerned. We had Fed's wallet out, and he's doing a bit of rowing back, and he still seems to want the job as to replace Powell. But some of his comments were a little bit all over the place. He said headline labour market numbers are okay. He said private sector not doing as well as people think, and it wouldn't take much to tip the labour market. Now, he's been banging on about a July cut several times recently in his speeches, which one would think you're going to put your money where your mouth is and dissent at the next Fed meeting. But he said he will not commit to a dissent on interest rate vote ahead of the July meeting. He says he doesn't think he could be any more clear on the rate position, on his rate position, but says it is probably not critical if the Fed waits 6 more weeks to cut. But there's also no real reason to hold off. He also said, if the president asked me to do the Fed chair job, I would say yes, but so far Trump has not been in touch. Kate, Mr. Waller, it's imperative we get a July cut, but he's not going to commit to saying so. And now he's saying it doesn't matter if they wait after all.
Yeah. Bit of rowing back, perhaps in the terms. Hey, you remember after the last few comments that I was thinking about perhaps they had a bit of a word between the different Fed governors to try and keep the same line. Perhaps that is part of it. I'm not sure if they even done it, but it does seem that somewhere they want to be on the same-ish line, most of them, which is probably meaning, well, the market is not expecting it for July, especially not after those inflation data that we saw. Yeah, back more in line and waiting for the next opportunity, perhaps to come back a bit more forceful about a rate cut. Is maybe he's just keeping a bit of his powder dry as well to then go and hammer harder for the September cut, which is still expected anyway.
Yeah, it feels like his prior comments are sort of painted him into a corner, like the data's showing up okay. There still doesn't look like there's a fundamental reason to cut. So, he's trying to get himself out that corner a bit, I think.
Yeah, you don't want to be, maybe they don't want to be seen each one of them to be the bad boy in the back of the classroom. Huh?
Yeah, exactly, because he'll get shown up to be wrong while Powell's being shown up to be right, and that's not a good, how should we say, interview process or something to put on your interview if he gets the job. But as he says, so far Powell's not been in touch. We got our usual Friday Gauls Beast late in the European day, as he wants to do. He says we're a little wary as the latest CPI data shows tariffs are pushing up goods inflation. It says it pains him to see arguments about Fed independence and that rates can go down a fair bit over next year. Just going on to the trade stuff. So Trump's been, apparently, according to the FT, he's going to be pushing for 15 to 20% minimum tariff on all EU goods. We've still got the potential for that to blow up. Trump himself said that on trade deals, there's big ones to announce soon. Have a couple of big trade letters also going out, and says when he sends out the paper saying 35 and 40%, it's a deal. And speaking about the currency, says he's not going to let the dollar slide. We also had Lutnick out Sunday night saying that Trump will be renegotiating the USMCA rather than maybe tinkering with certain parts. It could be that they're going to do a whole renegotiating on that. Very nutty. Yes, I think Powell is due to speak tomorrow, and it is scheduled. It's not going to be on monetary policy because we're in the blackout window. So any rumours that say it's a resignation speech are probably wide of the mark. I don't know what the subject is. We can look that up.
Yeah, it's about the title is so he's giving opening remarks at the integrated review of the capital framework for large banks, and Bowman is speaking there as well. I don't think that there's anything. So it is scheduled for sure, and they should not be talking about monetary policy, and I doubt that he's going to resign. As much as everybody would like to have a bit of drama, I don't think we're in for it.
No, exactly that. Right, let's get stuck into this Japan stuff. Right, so we started on Friday with PM Shiba having a meeting with Besant in the end, to which he said there was no detailed discussion on tariff terms, but that Besant said he's sure we can have a good deal. Besant was also out saying a good deal is more important than a rushed one, and that it's still possible, it's still within the realms of possibility that a deal is done. Overall, that wasn't anything wholly bullish regarding trade talks, but it wasn't a big knockback either. Japan's chief negotiator Akazawa is apparently visiting the US today for further talks. The Bank of Japan said that they may, or reports said that the Bank of Japan may offer a less gloomy view of the US tariff hit in its next report. So that's coming at their meeting at the end of the month. They're said to say that these tariff effects and trade effects aren't going to be as big as expected, but this is all the usual sources piece. We previously heard that they may revise up their CPI forecasts, which again was only supposed to be taken into account their cost push or temporary inflation stuff. Finance Minister Kato is apparently going to address market voices over bond moves. So there's still ruminations going on below the scene regarding bond moves. Right, so Ishiba's party, his party and coalition, lost the upper house majority. The early indications was that was going to happen in the exit polls, but there was still a very, very slim chance that he could have pulled a rabbit out of the hat. That wasn't to happen, though. In the end, he won 47 seats, which left him 3 short of an overall majority, him and the other parties in the upper house. So they've lost the majority, and he got 122 seats, needed 125 to keep the majority. Ishiba said he will stay on, if only to oversee trade talks and other important economic factors, but he's likely going to be facing pressure from people within his own party to resign. Potential ministerial changes could be expected, so we need to see what's going to happen in important roles like Akazawa, who's dealing with all this trade stuff, and people like the finance ministry, particularly Kato, whether they'll stay in or what, but this could all drag on a bit. There is the possibility that coalition talks might start up, although Ishiba himself said that no coalition expansion is planned. But obviously things can change pretty quickly. So nothing may change until a trade deal is agreed with the US, but we need to see over the next few sessions, days, whether the political mess is going to hinder getting any negotiations done. As we said, Akazawa is apparently already on his way to the US to continue talks. Opposition parties are already talking about no confidence vote, so that's in the mix as well. So overall, all in all, things have really become much harder in Japan on the political front, in terms of passing bills, resolutions, and whatever. And this is going to play out over the next few sessions and days ahead until we get a clear idea of what's going on. The yen, that looked a bit buy rumour sell fact, late or early on the Sunday Open. We did have some weekend markets running up dollar yen into the 149s, but it started heading lower when markets opened properly on Sunday night, and we did in fact actually see a dip down pretty much straight after all the markets came online, particularly in the retail market. So we're not, dollar yen isn't out the woods yet, but things could have been much, much worse, although they're still looking very shitty at the moment. A lot of uncertainty. One of the reasons why we're getting dollar yen coming down this morning still is because we've got US yields coming off a bit as well. But back to the Japanese side. Kay, what are your thoughts? A bit of a mess, and the last thing certainly the Bank of Japan needed.
Yeah, I think what's happening now in yen is just the first day after the election. Market got what it wanted, maybe not to the extent that it feared. Could have been worse, but fact is that LDP Komeito have no majority left anymore nor in the lower nor in the upper house, and that is going to um, put them in a position where they are at least going to have one other party voting for everything that they want to do if they want to get anything done. And the mess is, to me, potentially just starting. So what we've seen now is that really the market was positioned short yen for several reasons. We've set the upcoming elections, where the risk was for them to lose the majority, and also trade talks not going well. Now, we're still at virtually the same point. But yeah, there is a potential mess coming. I was saying last night in the room, as you said earlier as well. Now let's see first of all if there's going to be some sort of a cabinet reshuffle, which could be important for um, MOF, especially if Kato would go, but there's little reason for him to go, because the I don't think that the opposition have somebody like really ready here and now to step in Kato's shoes, nor perhaps Akazawa's shoes. The problem is, if Akazawa comes back with some kind of a framework, it will have to be voted in Japan, and there is this problem that the voters have shifted a bit to the right, and Japanese first, although they did not get enough votes to start proposing stuff, they can have enough votes to start blocking everything, and especially CDP, DPFP, they get them all together, and it could become a real mess. So I would not say that this was it. This is just what we've seen as a first reaction, and the real mess may somewhere only start, because they are going to need another party at least to put through whatever they want to put through. And one of the things that other parties were pretty adamant about is that they want to undo propose tax hikes or even do tax cuts, which is going to put the fiscal situation in Japan a bit more in already in difficulty than it is now, which may in turn have an impact on how the Bank of Japan may have to act. So by no means there is everything is done over there with just this election result. But the fact is that for markets, we now are in more of a wait and see situation rather than, oh, it's all going it's all going pear-shaped, because they're still very, very close to the majority. So they don't need an awful lot of support from one or the other party to drive things through, apart from those where they need a two-thirds majority or so. But Yeah, I mean, we may only be at the start of all the whole mess over there. I think now the market is first of all going to, unless we get like a very quick cabinet reshuffle, the market is probably going to look turn its attention back through to the trade deal first of all, and then see where we get on the political front, even with it after that.
Yeah, very much so. So
The thing, if I may, the thing is though that we have a little bit of a little bit of a push up that we saw on the JGB yields, but nowhere near anything that may alarm. Sorry, the Bank of Japan to step into have to step into to buy unscheduled bonds. So that also is a fact. I think where the market says like, okay, I mean a little bit less stress there. So we have to go back on pause now for a bit.
yeah, and it is a holiday in Japan today, so we may not get a full market reaction
Mm,
until tomorrow. So yeah, we've still got some uncertainty, particularly in market moves to deal with. But yeah, it wasn't a good result. It could have been much worse. So maybe small mercies there, but it's still a crap situation. Ali, there's nothing wrong with you putting your stuff up here, as we've said before. But if you're listing a ton of trades, we're not a trade checking service. So if we don't get round to you, don't take it personally. We have plenty of stuff to talk about. And if we can touch on your stuff, then we will do. But yeah, don't. We will never turn down people putting in comments in the chat here. Right, so while we're on dollar yen, I might as well stay there. Iron up, yes, I'm still long. I've tightened up my stop now. I'm long roughly an average 147.25. It's a little bit lopsided because I've got less of me 40s entry than I have of me 02s entries. But yeah, I'm still long. And I'm sorry, my 07 entries, and I've tightened my stop up just under this line, and just under the 50 level as well, just in case we do get a pullback. I don't want to give too much away. I'm not for turning short in this pair. There's still plenty of reasons for the yen to remain weak. This might just be a bit of noise. As I mentioned, we are seeing US yields coming off today, particularly in the 10-year. So that's going to be dragging dollar yen down with it. Obviously, different pictures in the crosses and whatnot. Things like euro yen still sitting up near highs, not coming off as much. But we will shift a bit of focus from Japan to the rest of the world and what Trump's getting up to. So just keep an eye on what's happening in US bonds, particularly 10 years. 450, 420s are the range for now. And that's what we're sticking in for the moment. And the dollar will move accordingly on that. As for everything else, a bit quiet today, Kay. Not much else going on. We've got the ECB coming up this week. I'll have a look at what's coming up in a moment. But as far as the euro is concerned, we're doing a bit of water treading at the moment.
Yeah, I think. Well, as you said, you mentioned the yields a bit lower in the US. That's probably playing on quite a few dollar pairs. I'd rather say euro, cable. We're seeing uh, uh, stabilizing. Let's call it that way. We are stabilizing, and that's what I said last end of last week as well. Rates a bit less hot, so the currencies can stabilize too, and that is exactly what we are seeing. And that's also the reason why I've actually split my dollar yen into dollar and euro yen parts, because I'm not really sure about the dollar side of things, but I still don't see a reason to be long yen right now, unless we get a trade deal, or one of those parties, maybe the Democratic Party, or Noda's party, perhaps the DPFP, wants to go in ship with Ishiba. But there is an issue, as you said, with Ishiba. Sorry to come back on Japan, because also the that was Kuroda and Abe's finance minister, right? He did say that if they lost the majority, he will not support for Ishiba to stay on, and that could be an additional bit that we need to look at, because if the LDP heavyweights themselves start to push Ishiba towards the exit, who is going to come in their place, right? And the risk is that if it's ASO pushing, we may veer a little bit more to the Hawks side, and that may not help the yen either. So there's several reasons why I want to still keep a yen short on right now. But as you were showing in the West, yep, I think we need to be prepared to trade a few ranges in the currencies. One other thing is that those equity markets are, if you look at S&P, are going up again, and we know lower yields, higher equity markets are usually taking away some of the support in dollars, and that may be a bit of a factor to start the week. But on the other hand, and that's why I think we are going to be in ranges, is there much support in the other currencies? That is the question that remains. Okay, we've seen the pairs hold pretty decent levels, and I think we can continue to move a little bit against the dollar to start the week because of those yields and the stock markets. But do we have the power to start selling dollars again, outright selling dollars? I'm not sure at the start of this week. It's very quiet on the data front as well.
Yeah, absolutely. Yeah, I mean, I think it's easy to say when you've seen markets turn already, but I think we can safely say that maybe for now the dollar short trade has run as far as it's gone for the moment, because we have seen the data improve. We have seen inflation going higher and the like. So there's still no fundamental reason to sell the dollar except for
Mm.
Trump. And yeah, that's. I'm not going to say it's the end, but it could be that we're at least seeing a pause in that move.
Yeah, but then on the other hand, we have seen the correction, and the correction remains what it is. The retracement remains corrective. Okay, so I don't think the market has given up on it yet. That's the thing. You see your 38.2 there, it's still
Yeah,
holding on the euro dollar. This the important levels that would be there as a retracement are still holding, right?
yeah,
That is the other side of the coin.
yeah. Look at the trend since the year. This is still looking like a minor
Mm,
pullback.
mm, mm.
So yeah, but that can still be worth even a pullback to 115 is some decent pips from here. That's going to be my key level from that. Right, let's have a look at what's coming up this week. Not much of note until the latter part of the week when we get the ECB, which should be a nothing burger, but there's always something to look out for, be it further talk about the currency or their views going into the latter part of the year. It's probably going to be a big old punt, this meeting, and then they'll all disappear off to the airports and caravans and whatever else they do for the summer. So not expecting too much from that. Today, not a lot out. We've got a bit of PPI data from Canada and the Business Outlook survey, which can be a bit of a market mover if things are quiet and there's something to read in those. Tomorrow, RBA meeting minutes, which, don't know, it might add or subtract from the bullishness that we got at the last meeting as to what they're going to be doing next. Wednesday, a bit quiet, get a bit of housing data, existing home sales, and we get the Eurozone consumer confidence number, which always comes with a minus sign attached to it. Thursday, we start getting the flash PMIs through, which really the market's going to be wanting to see, particularly from Germany, some of this upbeat and promised spending just starting to, at the very least, affect sentiment, seeing a more positive sentiment, which could show out in the flash PMIs, where we get those from across the world and Europe and UK, and then later on in the US. Is ECB day, as just spoken about, Canadian retail sales. as well as the usual jobless claims. And then on Friday, a little bit quiet. We got some retail sales data out from the UK, so we'll get to see if all that lovely weather has helped sales recover a little bit more than durable goods orders in the US. Apart from that, Kay, it's all a bit quiet.
Thursday. Thursday is probably the day to be in the office, and then on I mean UK retail sales, I wouldn't underestimate them because we know the sterling trades a bit. We've had this big setback trying to recover now. It could be an interesting day come, and it's a Friday, so we could have a kind of a rapid move in sterling, perhaps to trade off, especially that after that period, as I said, of weakness, we are seeing the sterling trying to recover some. It could be an interesting one on Friday morning, but then until then, really, that's also why I think we may be just in ranges until Thursday, unless our orange hurricane will spice up things again, of course.
Yeah, and probably the only time I'm actually thankful that UK data out is at 7 o'clock in the morning, because it means we can be back in bed by 10 past. It's a bit more difficult to do that at
Oh,
9:30.
yeah. And then already prepare the picnic basket to get out.
Yeah, exactly. Right, not much else to talk about here. A couple I'm keeping an eye on. Aussie Kiwi. We did have a bit of a rally up to near that 110. Then we had a little bit of a pullback, a little bit of a wobble also last week. I did try a little bit of a long, which I scratched, quite fortunately, because then we had a little bit of a blip out under, down towards the 109s and under. We have recovered back a bit, so I'm still looking at potentially getting in some shorts up from 110s, maybe up to the prior highs, 111s, near 112. But we'll see what happens. It looks like it's run out of puff for now. Dollar CAD still struggling to make any headway above any of the levels. We've got this zone. It's now holding the top side of the zone. We're just messing around in it. It needs to get back above here to keep this trend going and maybe have another crack up towards those highs. But if we don't and we stay below, then we might just start creeping lower. And if we're back under 136.80s, we're probably going for a wander back to 136.50.
No,
and then we'll see what we're going to do. Yes, mate.
What's next for Canada? Because we heard those comments from Trump, about Canada, USMCA, but I think the USMCA review is planned, but we just don't know when it's going to start. But what's next for Canada really? Because it's been a bit of an on and off, up and down for those data as well. Yeah, we can't get above 138, 137, three quarters, 138, but it's not really coming off either. So I mean, is there really something to do there, or is it like, are we waiting for what's next really?
Yeah, I think that's very much it. I think the market's caught between two different things. You know, what's going on in the US, a bit of what's going on in oil. As you say, the underlying data isn't exactly screaming for the BOC to continue cutting.
They're next week, by the way.
It's what, sorry?
They are next week as well,
Yeah,
by the way, as well, right?
Yeah. Whole big slate next week.
Yeah.
All the majors are coming up. Well, most of the majors are coming up next week. But yeah, I think it's just stuck in the currents, this one at the moment. I don't know what's going to shake it out. Maybe if we see the PMI data coming in strongly, that's going to be a boost for oil and then a boost for the CAD. But yeah, this one's, as I said last week, this one's turned into the North American euro sterling at the moment.
Somewhere. Yeah. And we could argue with a bit more volatility that the MEX is doing exactly the same.
Yeah, absolutely. So, but then, you know, we've got some good ranges, we've got some good levels you can lean against. And, you know, touch wood that it's not going to fly too far from those levels. So it gives you a chance to potentially stay in the trade. Dollar MEX, doing the same. Still got this creeping higher. Though again, looks like it might have just be running out of puff a little bit. But unless we're breaking below this sort of 65, 67, those two little lows, if we're breaking below there, then that might just change the picture and we might be heading back down to these lows here. But we'll have to wait and see. I did think we might get a bit more reaction on that Lutnick comment. And the renegotiation, I think, if I remember, it's up for official discussion. Is it March or something? But they've spoken around maybe start talking September, October. So
yeah, that's what
you
I
never know
thought.
with Trump. He could want to talk about it today.
Yeah, that's what I thought. Yeah. Well, I'm actually a little bit the other side again. But it's like really small. I just sold a little because it was holding below that around that 84, 82, 84 got capped and sold a little, but it's going nowhere. It's as you say. I think it's the North American situation, or North and Mexican, is actually the USMCA maybe a little bit in a bit locked right now, and we are really waiting for news over there.
Yeah, I'm still got my core short, and I've got a little separate long as well, which is a rough average about 1875, not the greatest, but yeah, I think if I see another move into the 80s, I'll start chopping that down a bit, just in case we are going to see a move back down to the lows. Right, I'm going to pass it over to you,
Yeah, I
Monsieur.
don't have. Yeah, I really don't have a lot to show to start the week because we are in those ranges. Just going to go through a couple of the traditional ones. If anyone wants to look at something really in particular, feel free. I can have a look at it. Gold still in the range, but that trend line has been so well respected. Lows are creeping up, so it's still bid. And it does look like even with the weekend not having been extremely bad, it's still holding up. And we are seeing the same thing in silver. So the metals are still pretty bid. So I would not be surprised at some stage if we go for a little bit of a walk above that multiple top here, and go back and have a look at what's happening around the 34 zone. For the time being, I don't think it's warranted for a really big move, but similar to silver, and I'll show it, we are still seeing people coming in, well, around trendline support, you may say, but also coming in sooner and sooner to still keep this thing going. So that may hint that perhaps those bigger hedgers or central bankers or whatever, they still have an interest there. And silver is really a prime example, as I was saying. Like we had this big thing hold above the support around 35 then, and now we are starting to do the same thing above support here. We aren't going to test it, and we are holding, and silver is now trying to push. So that still tells me that, sorry, those buyers coming in earlier, earlier and faster, and that's keeping it still in a very bid scenario. To start retracing deeper, we're going to have to get back below 38.05 for a starter, but then especially at least go and test this zone around 37 in silver to have a chance for a deeper correction. For as long as we don't get it, this is still looking pretty bid, okay? So that for the metals. Okay, dollar Norway, something I have not really traded much of late, but it's been kept relatively bid. Yeah, I need to clean this one up. As I said, I haven't been trading much of it, but to me, it's is it really the dollar playing the biggest part here? Yes, it has been during the correction of the dollar, but then I think it's more to do with what's happening in Euro Norway, for instance, which is really keeping it very bid for now. So I would say that on the day. I was talking about this 1014 in the room. We had a quick look below on Friday, but bounced. I think this is probably going to be rather than this one. 10 1014s, somewhere around 1014. It's dollar Norway, give and take a couple of big figures. Okay, I mean you need to give a bit of leeway in those candies as well, because they are not like trading like euro dollar to the people. So, but for as long as we're above 1014, probably bid. And then the other side is 1024, stretchy to 1025, perhaps a little bit those lows here, 1023 as well. So that's where we are. I think you look at those two levels, break either side of them. Nuno, I think that's where your next move is going to be coming in the dollar Norway. Okay, uh, very very big picture is that we've seen this dollar decline, but again, as I say, you have to look at the sensibility of the Norwegian kroner. It's always going to also move with stuff like gas and oil, right? And that is what keeping this pair, the dollar, the euro NOK, a bit for now as well. You can compare it a bit with, if you want to know really whether the Norwegian kroner has a potential for strength or weakness, you look at the euro Norway because it's the biggest trading partner. It's a bit like your euro Swiss for when people ask what about dollar Swiss. Yeah, you have the dollar is one thing, but then you have to look at what the biggest trading partner is doing, and then you go over to the euro cross to measure strength or weakness of a currency. And we can easily say here that over the past month or so, Norwegian krona has been trading a little bit weaker. So that gives the chance for finding a bid in dollar Norway, perhaps a bit bigger than for it to come down, because this cross is still pretty big. Okay, Aussie dollar, I don't find much to do here right now. It's trying around the prior channel. But what also has been relatively significant is a big word, but we had this big run down, and we saw it on the Aussie, we saw it on the euro, we saw it on many pairs, but then it's bounced relatively easily. I think I'm going to take this one off because this is really going to this is really not um, at the order of the day anymore. But it's bouncing relatively easily as well. I think we are going to be in a range. But then you look again, you remember what we were talking about so often, 65, 35, 50. If it has to bounce more, it has to break above there. And then we are, I mean, not even 66, but look what's happening around 65, 35, 50, because again, we went into the zone on Friday and we kept there. So I think we're in a bit of a range here. 64 three quarters is a first half decent support to the downside here. Kiwi is doing exactly the same thing. That avoided a big accident. Whoops, that avoided a big accident in my opinion by holding last week on Thursday that low 59s. But again, bit of resistance already starting around 59, 60 to 70. Bit the same thing as on the Aussie, which makes me think that for the start of the week at least, we are going to be more rangy than anything else. So that is kind of what I'm looking at to start the week. And then already Ryan looked at it, but just the dollar yen, I think for as long as we hold there that low 47s, it's not going to change much, but we need to allow for a little bit more perhaps when the US will come in. Uh, Allow for, we could go for a walk here below 147, 65, 70, because probably in the US as well, people are long dollar yen, so we could go for a little bit of a walk lower to start the week first. But I think those low that setback that we saw on Powell is should, in my opinion, hold unless something really dramatic happens to the dollar, because there's still very little reasons to really be long the yen. I think we have said enough, Ryan, for the first day of the week. I'll give it back to you, mate.
Thank you very much, mate. Good stuff as always. And yet we're all set up for the week ahead. Hope you are too. Irrespective of lack of data, we still have Mr. Trump to deal with and everything else going on there. So it should be eventful. Either way, have a great week, everybody. Have a great day, and we'll see you tomorrow. Take care.